Hey guys, welcome to BTW. This week's Buyer Tip Wednesday. We're at step 2 of becoming a homeowner, which is deciding your budget. We're now at part 2. How much you can get for your mortgage. Again, mortgage is a loan you get either from the bank, a private lender, or through an institution. So there's different lenders. A lender, which means the major banks, including TD, CIBC, RBC, all the banks you know. And B lender, for example, Equitable Bank or some credit unions. Usually their interest rate is a little higher, but they look at different criteria. And also we have private lenders you cannot get from A lender or B lender. So the A lenders, the major banks, will look at usually your credit score, your employment history, or the value of an asset, those things to give you mortgage. For B lenders, they usually look at, if you're a business owner, they look at your 6 months of cash flow. Private lenders look at in 6 or 12 months where they can pay the money back right away. Click the first comment below to see which one suits you better.